take a look at GameStop stock. We have a nice recent development where this part is not the good part. They had mixed earnings and they ended up dropping down. But the awesome part is it bounced off this upward trend support level right here. And the significance of this upward trend support level is that it dates back since August of 2020, where it went up and got knocked down as resistance multiple times first. So it acted as resistance first in August of 2020. But when it passed the resistance level, it came down and acted as support then on after. So it came down, bounced off support, came down, bounced off support. Yes, a false breakout. Yes, it acted as resistance again. But when it broke through, it acted as support then on after, support again, and then support, and helped pass this downward trend resistance line that we're hoping to break, building up enough momentum to break through it. Unfortunately, got stuck by the horizontal resistance level that I mentioned in the last video. But either way, it came down again for the another additional time to bounce off support level. In this video, I'm going to talk about shorted positions. I'm going to talk about this horizontal resistance level that you could clearly see twice right here, that it knocked it down back in March of 2021, June of 2021, and then multiple times right about here in January 2021. I'm going to talk about, yes, they had a mixed earnings, but quick thing, they're trying to evolve into a tech company. They see themselves evolving to a tech company. So GameStop apparently no longer sees itself as a retailer under the new leadership, but rather as a new tech company, perhaps someday worthy of being in the same discussion as Apple, Microsoft, and Google. So, or not as a new tech company, but as its tech company. GameStop has two long-term goals: delighting customers and delivering value for stockholders. So that's awesome in terms of investments. We're evolving from a video game retailer to a technology company that connects customers with games, entertainment, and a wide assortment of products. They didn't elaborate more after that, but it's showing that they're trying to grow, which is awesome, and it's great for investments wise. I'm going to mention the resistance levels, I'm going to mention the support levels, the overall movement for the stock, and hopefully enjoy the video. Hopefully like it. If you do, consider dropping a like. Consider subscribing as well if you want to be notified when I do upload my next video for GameStop. And quick disclaimer, like always, I'm not a financial advisor, I'm not a professional. Everything I do share with you is just my opinion, it is not advice. So please do your own due diligence and research before buying and selling. Now, one thing though, in terms of the resistance levels and support levels, I'm going to cover these first and then I'm going to cover the outlook. If you see right here, this is the RSI chart. This is for the 6-month chart, by the way. So there's like the 1-year chart, 5-year chart, 6-month chart, 3-month chart, and all that stuff, 1-day chart. But this is the RSI chart for the 6-month chart. And you can see it was coming from oversold territory. So you could have potentially anticipated a potential bounce at one level, which if you were putting enough faith in the upward trend support level, you could have entered right about here, which was $182, but showing $178 nonetheless. And then this MACD line right here is indicating a potential crossover to a bullish run up. So this indicates if it's a bullish or bearish movement. And for the time being, yes, it's still in the negative, indicating a bearish movement still. But if it crosses over to positive, it could potentially lead up to a bullish movement overall for more upside. And the reason why I say potentially is it's not a guarantee sometimes, where we've seen right here in the past, like usually does point to it, but in the past, right about here back in June of 2021, it was in the negative for quite some time and then crossed over to a positive, but it barely went up for the most part, and then it ended up technically for the time being going down a little bit. But I'm going to show reasons why this could be potentially dismissed and it could continue to the upside. But I want to talk about I'll talk about the resistance levels and support levels first. So in terms of resistance levels, like I said in the last video, we need to pass get into the $189 range to $226 price point range. These are horizontal resistance levels, and specifically need to pass $226 price point in terms of resistance level. And you can see right about here, as of September 1st, I believe, give or take, during that timing date, it had issues passing $226 price point. Keep in mind, this is the 6-month chart graph. Price points could be a little bit compressed, but around $226 price point, it had difficulties passing as of recent. Again, September 1st, it could have been. And then also after that, you're going to have to pass the $237 price point to $244 price point resistance level. For the time being, there is more resistance levels above that. I'll mention them in the future date of the videos if it does happen, but if it were to spike up right now dramatically, the major resistance level that you need to be concerned about hypothetically is somewhere between this horizontal resistance level. So just to visually show, if it were to spike up right now hypothetically, and then it might come down a little bit and bounce off and break it or something, but you're looking at passing $335 to $355 price point, more specifically $354, but around $335 to $355. And if that passes, the coast is not necessarily in the clear fully. You would still have to pass $380 to $388 price point, but you would at least be in really good shape, relatively good shape, to continue back up to the upside for the tackle of the all-time high of $483. But for the time being, the main concern is passing, I would say 226 and then to $244 price point. Now, in terms of support level, you could rely on the upward trend support level right here, where if it were to drop down right now, you could roughly enter at $184, it looks like, for the most part. But then you could probably have a false breakout. And what I mean by that is you could even go lower than it first and then bounce back up, because of these moving averages could act as support, and it would be like a final last draw, which would be $178 price point, give or take, right about here. It's showing right on the moving average right here. Does it have to act as support? Not a guarantee, but sometimes I've noticed that they act as support and resistance in terms of moving averages here and there. Now, if you think the $178 price point will be broken, it's going to break the upward trend support level, the moving average, so on and so forth, then it could be a pretty dramatic drop, and it potentially could drop down to the $143, $147 price point. But before it gets to that, there's a lot of support at the $170 price point in general, then the $169 to $170 price, $169 to $167 price point, and then the $162, $157, and then $150 to $155 price point. I don't see that necessarily happening, but I'm going to explain why there's a potential, and I'm going to explain why there's a potential that it won't happen as well. We go to short positions right about here, GameStop, statistics, Yahoo Finance. You can see that floated share position shorted positions is at 17.05% as of August 13th, 2021. This is for floated shares. The difference between floated shares and outstanding shares is just outstanding shares includes restricted shares. I dismiss that, even though it's at 10.18%, which is a decent amount, but I dismiss that because you can't buy restricted shares, so it doesn't matter. So I look at floated shares. And the reason why this is important as well is if it's at 20% or above, it is an extremely shorted territory, but it is extremely close right now. So it's at least heavily shorted, if not extremely shorted if you count for naked short shares, which is potential that there is based off much of recent developments that we've seen in the past few months. Now, this is as of August 13th, 2021, so it could be updated to be higher or lower, but that would help in terms of short squeeze positions, or not short squeeze positions, but short squeeze itself. Now, the reason why there's a little bit of a concern, so even though there's a potential that it could continue to the upside, like I stated with the 6-month chart, the 1-year chart and the 5-year chart are showing mixed directions, if you could say that. So here's the 1-year chart. This 1-year chart for the MAC line, it's indicating, yes, it's in the bullish positive movement right now, but it could become it could cross over to the negative, becoming a bearish movement. And if that is the case, then that would break through this upward trend support line. That doesn't look like it's clean right now, because this line is supposed to be for the 6-month chart, not for the 1-year chart. But if it does break, that was why I was expecting that it could be a massive drop, not massive specifically, but it might drop down to $143, $147 price point. But then if you look at the 5-year chart, the 5-year chart is showing that, yes, it's in the negative right now, but it's technically getting small, like lighter shades of red bars, smaller bars, potentially could cross over to the positive, becoming a bullish movement, indicating that there will be a bullish run overall. But is this a guarantee that, like, which one's going to act overall? And then who's to say that the 1-year chart won't act first before the 5-year chart? Because the 5-year chart is more for like a longer term, so it could go negative before it goes positive, and the 5-year chart won't be affected as much, and it'll still look like it's going to cross over to a positive. The thing is, though, if you put the short squeeze in terms of play, because it's heavily shorted, then I think there's a chance it could still go up to the upside. But at the same time, don't be surprised if it does go down because of the 1-year chart. I'm kind of worried about this. That's the only consideration I have about this, the issue. But seems like it should be fine, but just be aware the 1-year chart is potentially indicating a potential downside. That's all. So be cautious about that. Hopefully I covered everything. I feel like I'm missing something. If I am, I'll comment down below. If you like the video, consider dropping a like. It does help the channel, so thank you so much for that. If you have any questions, do not hesitate to ask. I'll try to answer as soon as possible. And if you like videos like this or other financial videos, consider subscribing so you'll be notified when I do upload those videos. Thanks again for watching, and I'll see you in the next video. Peace.